Hi there. Today we are going to discuss the question which is compulsory in the final University of London exam. And this question implies compilation of balance sheet, profit and loss statement, and statement of changes in equity. We call it financial statements. And in a few words, I want to refresh the topic of compilation of financial statements with the help of adjustments. Financial statements but must be relevant and faithfully representing all the performance and financial results of the firm's financial year. And adjustments are accounting entries which should be made by the chief accountant, I would say, in a small firm and by the team of accountants in a large corporation at the end of the year. Normally, adjustments are the accounting entries which are made at the end of the year by the chief accountant in the small firm and by the team of accountants in the corporation. And the question, why do we need it, could be answered as follows. During the period, bookkeepers analyze transactions and journalize and post them into the books of the firm. Normally, this is some accounting software. And at the end of the period, accounting team can compile an adjusted trial balance, and adjustments are the entries which are performed by the chief accountant, as I said before, and it helps to receive relevant and faithful, complete financial statements. Financial statements are normally compiled out of balance sheet or statement of financial position at the certain date, profit and loss statement for the period, statement of changes in equity, these three we are to discuss right now, and cash flow together with the notes to financial statements. End of period adjustments include accruals, deferrals, and asset adjustments. And using as an example question 16 out of University of London final exam of 2019, we can discuss accruals, deferrals, and asset adjustments and at its nature. So let's start. When we come up with that types of questions, we normally see the so-called trial balance in the given information. So here we have trial balance of Moore Ltd, which is a family business, at 31st of December 2018, I'm sorry. And we have some pieces of the additional information. Here we have 8 points, and all that points are needed. I believe that all of them are needed to make an adjustment. Adjusting entry normally is the entry which requires some changes in balance sheet and profit and loss statement. So one side of accounting entry goes to balance sheet and changing something there, and the other side of accounting entry goes to profit and loss statement account and changes something there, so affecting profit of the company during the year. But sometimes we can have here in additional info something which won't be posted anywhere. For example, dividends which are proposed, or maybe here we can have something which implies correcting of mistakes or errors made previously. And in that particular case, we can make not an adjustment but entry, correcting entry in order to change something in trial balance to make it relevant and reliable. So requirement here is to prepare income statement, which is called sometimes profit and loss statement, a statement of changes in equity for the same year, and statement of financial position, sometimes referred as balance sheet. And now I will suggest you a solution which I believe will help you to save some time at the final exam without no special recording of adjusting entries, but changing the balance sheet and profit and loss statement forms itself. I suggest to start with compiling two templates of basic financial statements, balance sheet and profit and loss statement, and the two exam scripts. Normally, you will have several pages, empty pages, and you can use two empty pages and put it before your eyes as follows. So I will split my screen as 2/3 and 1/3, and here that part will be used for balance sheet and that part will be used for P&L. And here I would start compiling templates of balance sheet or statement of financial position and profit and loss statement, using all the lines out of trial balance provided before any adjustments. So line by line, I will fill in my forms using each and every line once. Each and every line from trial balance should appear once either in balance sheet or in profit and loss statement, and there is no possibility that any line would be omitted except for suspense account. Except for suspense account. Suspense account should be eliminated before final compilation of balance sheet and profit and loss statement. So let's start. So here I would draw a template of balance sheet. Balance sheet should have a name, date, and currency. You can call it either balance sheet or statement of financial position. You have to use the company's name. I remember that the first letter is M. We have to use the exact date, 21st of December 2018, and we have to state currency here. The currency which is used in trial balance is pounds, normal pounds. So we have to state it once at the very beginning of balance sheet. Profit and loss statement should be named as profit and loss statement or income statement of M for the year ended, because profit and losses are recorded for the certain period. All amounts are in pounds also. So these are the names of financial statements we are to compile. And then I'll start with some lines which I'm sure would appear here. Balance sheet has a very strict structure. There would be assets. By the way, the basic accounting equation goes from that form of financial statement. Assets always equals liability plus equity. Assets would be divided between non-current portion and current portion. Then I have to leave some space and write down liabilities, which should be divided between long-term liabilities and short-term liabilities. And the final section of balance sheet is capital or equity. These are the template. This is the template of balance sheet, and these are sections which would for sure appear there. And on the right side, I have income statement, and income statement always starts with sales line, and I will allow some space, a lot of space, for different calculations like cost of sales, gross profit, adding other income, deducting other expenses. At the very end of income statement, I would have at the very bottom of my page, I would have net income. And I suggest you to use maybe pencil here because you have to follow the certain structure of profit and loss statement. And it's very important not to forget the very end, the very final lines of profit and loss statement and write them in a certain sequence. So before net income, there would be tax. Before, we would have profit before tax. Before PBT, we would have interest expense. And PBIT, profit before interest and tax, here. And all that space would be used for different calculations, like, as I said before, cost of sales, other income, other expenses. So we can start. Line by line, we have to fill in our forms. So I will change the color and I will change the dot. So the first line here reads land. Land would appear in balance sheet under non-current assets. Here we would have land, and I have to refresh your knowledge of presentation. And non-current assets should be presented at historical cost, accumulated depreciation, and net book value, which should be accounted for as a final subtotal of non-current assets. So land should be presented at historical cost only because land is assumed to be like immortal asset and no depreciation accrued. 150,000, and net book value, I suppose, would be 150,000, but we have to read the adjustment before. The next line is plant and equipment at cost with accumulated depreciation attached. But depreciation is stated here at the 1st of January of the same year. So this is the depreciation at the beginning of the year. I would state that amounts here, and then I do know for sure we would adjust that lines by the depreciation expense of the current year. I believe I need to use the next line. That was property, plant, and equipment. Then we have delivery events at cost and delivery events accumulated depreciation. We have to use these lines in the same manner. The number 8644. Okay. The next lines, inventory and trade receivables. So I believe that non-current assets finished in that trial balance. Inventory, which is stated here, is the stock at the beginning of the year. That amount should be used in profit and loss statement for the purposes of cost of sales calculation. So after the sales line, we have to leave some space for any occasional sales returns, so sales discount, maybe we will have them, and start the cost of goods sold calculation, which should be calculated using the fairly simple formula. Opening stock plus purchases less discounts, if any, less returns, plus delivery costs, delivery in, if any, less closing stock. And here we have to state opening stock amount, which could be found in the trial balance as a given number. And this is, I forgot the number, 123. 123. Great. The next line, trade receivables. Trade receivables together with provision for bad debts. Provision for bad debts is the line which goes to balance sheet, asset section, current asset, but with the minus sign, decreasing the gross trade receivables amount of 183 to the net amount, net of bad or doubtful debts. So here we would have trade receivables. I'd better write it like accounts receivable less provision for bad debt. Trade receivables 183. Provision for bad debts 10,000. I won't close the brackets because I do know for sure that if we have provision for bad debts and trial balance, there would be some adjustment, some additional information on that line. So it would be changed in some time. The next line, prepaid insurance. I believe that would be the last line. I'm scrolling on my screen up and down, and then you have to use the printed or your screen with the wording of the problem. Prepaid insurance with a debit balance of 3,000 at the beginning of the year should be stated in current assets. Prepaid insurance. So we have a balance of £3,000. Accrued interest is a liability and should be stated under short-term liabilities, interest accrued in amount of 4,000. Then we have accrued electricity at the beginning of the year. I will call it accruals. Some accruals, 8,000. Then we have bank balance with the credit final balance. Here you have it. And this is important. When we have bank account with a credit balance, it means that the company has overdrawn account. And that amount should be stated as current liability, but not as a current asset. This is like the popular mistake from the students. So here we would have overdraft of 18,000. 18,000. Then we have trade payables, accounts payable in amount of 111,000. We have 10% debenture loan repayable in 2021. That means this is the long-term liability. So we would write down here debentures and the long-term liability section, debentures in amount of 80,000. Then we have ordinary share capital of 600,000 shares, half pound each. That means that share capital, which should be stated here, share capital of the company is 300 pounds. Then we have retained profits with the credit balance, retained profit 60,000. And then I can see that we have some lines which should appear in income statement. So I believe that lines which go to balance sheet almost finished. So we have completed template. Okay, let's start fill in income statement. I believe that all that lines, starting with the sales revenue line and down, need to be transferred to income statement template, except for suspense account, as I said before. So let's start fill in income statement. The first line, sales revenue with the credit balance, 2,049,000 should appear here. 2,049,000. We have the next line, returns inward, and returns inward are the goods which were previously sold to the customers, and by any reason customer decided to return it back. So that amount should decrease our gross sales to net sales amount, 88,000 pounds in our case. Next line, purchases. Purchases, as I said before, is used for calculation of cost of goods sold. Purchases in amount of 1,391,000 should appear here, and opening stock, I deleted it occasionally, 123,000 should appear here. Insurance, the next line after the purchases. Insurance is the other expense of the company. So once we have completed cost of goods sold calculation, we can calculate gross profit. So let's leave some space and fill in that line, gross profit. And here we would have the final amount, which would be calculated after all the lines would be filled in, all the lines above. And below gross profit should appear other expenses and other income. So I would write operating income and expenses. Operating income and expenses. And the first expense here would be insurance. As I can see from the trial balance, there are no credit balance in that lines. That means that there would be no other income in the company. All the lines are represented by expenses. So the first expense is insurance here. Insurance in amount of 17. Then we have interim dividend paid. Interim dividend paid is not expense. It should appear in statement of changes in equity or equity section of balance sheet. So I would keep in mind that that line wasn't used. I will highlight it somehow in my trial balance with the special color of green. And interim dividends paid would be used when we would be compiling statement of changes in equity or equity section of balance sheet. The next line, distribution costs, expenses also. Distribution costs in amount of 327,000. Then we have advertising. Advertising in amount of 15,000. Then we have electricity. In amount of 20,000. Then we have interest paid, and here the final lines of profit and loss statement, which we have marked in our template, are in use. So interest expense should be stated here at a special place. So here we will have interest paid in amount 6,000. And I remind you that all expenses should be written down with a minus sign or in brackets. And the final line in trial balance is suspense account, and suspense account is something that, which should be eliminated before final compilation of income statement. So what we have done to the moment, we have filled in templates of balance sheet and income statement by the amounts which were provided in trial balance. So we have unadjusted balance sheet and profit and loss statement. And now we have to adjust all the amounts within using the additional information and come up with a net profit and loss statement and balanced balance sheet where assets equals liabilities plus equity. So let's start. I will change the color. I will use green for adjustments, which I'll be making right in the form. So the first piece of additional information here is the piece about prepaid insurance, how it should be sold. So on the 1st June, the company paid building insurance on one of its warehouses of 6,000 for the 12 months ended 31st May 2019. So let's draw a timeline. And here we have the 1st of June 18. Here we have 31st of May 19. And somewhere here we will have 31st of December, the end of financial year. So all the amounts, all the insurance which is used by the end of the date should be treated as expense, insurance expense. And all the insurance which should be used in subsequent 5 months of year 19 should be treated as prepayment. So if the company paid 6,000 for the whole year of insurance, prepayment should be stated as 2,500 and expenses should be stated as 3,500. That means that we have to adjust insurance expense and insurance prepaid. Now we have to adjust a line prepaid insurance in balance sheet and insurance expense in income statement. So using the special adjusting color, I have to deduct 500 pounds out of prepaid insurance because we have to have 2,500 here. We have just calculated that amount. And I have to increase insurance expense for the period, adding that 500 to the insurance expense in the income statement. So the total expense on insurance would be 17.5. Great. Now we can move to the next point, which is about accruals. So the next point, number 2, states that the company has unpaid interest and the company received electricity invoice later, after the year was ended in February 2019. Also, directors propose to pay dividend, blah, 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 but when we see the words propose, discussed, agreed, promised, in referral to dividends, we have to skip it because dividends should be accounted for only when paid. So that special line has no interest for us. We have to deal with previous 2 sentences. And first we have to deal somehow with unpaid interest. Unpaid interest. I have highlighted in trial balance the debenture loan repayable in 2021 in amount of 80,000. That means that the company should pay 8,000 as an interest expense per year. And we have the special line which reads interest paid 6,000. That means that 2,000 of interest is still outstanding. That means that we have to increase interest expense in profit and loss statement. We have 6 paid and we have to add 2,000 more, making the total interest expense per year 800. And we have to adjust interest accrued. We have to adjust interest accrued, adding 2,000 here, making the total accruals for interest equals 6,000. Great. The next sentence is about electricity bill. And now I have to draw a timeline one more time. So here we have New Year's Eve, the end of accounting period, and the company received a bill covering 3 months which were ended at 31st of January. So when we talk about 3 months before, we talk about January, December, and November. November, December, January. And the total expense, electricity expense, we assume it to be evenly spread throughout that 3 months, equals 9,000 pounds. And now we have to make sure that we have accruals of £6,000 in statement of financial position or balance sheet at the end of the year. So let's go to the information we have taken from trial balance, and here we have a line in short-term liability section which reads accruals, and I will remind you that that relates to electricity, and that amount was taken from trial balance, and we have to have here 6,000 of accrued electricity. So we have to adjust that 8 by 2,000. The same we have to make with the electricity expense in statement of profit and losses. So we have to deduct, since we have adjusted accruals by 2, we have to make the same with the expenses. We have to deduct 2,000 from expenses, receiving the final amount of electricity expense equals 18. So that would be the final amount of electricity expense. Okay, we can move forward to the next piece of information. The next piece of information is about fixed assets. So point 3 and point 4 should be solved simultaneously, and I believe we have to create special space for workings here. So please read it through before we start to solve the question. The question is to accrue for depreciation and to find the profit or loss on disposal of delivery van. So we have information about sale, we have information about depreciation, and let's start with the delivery van sold. The special space for workings here, and I will call working 1 fixed asset. So van disposal. When, and I believe we have to copy the wording for our convenience. Okay, so the company sold delivery van for 20, and the historic cost of that van was 40,000. We have to calculate net book value of that van and compare it with the cash proceeds of 20,000 in order to find whether it was a loss or profit on disposal. But before we have to calculate depreciation, accumulated depreciation to the date. The van was purchased in previous year, so we have to accrue only 1 year's depreciation, and vans are depreciated on the reducing balance method using 40% per year rate. So we have to multiply 40,000 of initial cost by 40% of year's depreciation, and 16,000 eventually would be the accumulated depreciation at the year end, because the company provides no depreciation the year of disposal, so only 1 year's depreciation charge should be accounted for as accumulated depreciation. Net book value at the moment of sale was for 24, and the van was sold for 20. That means the operation created loss of £4,000. So this amount goes to profit and loss statement. And these amounts, 40 historical cost and accumulated depreciation, should adjust our records concerning the fixed assets in financial statements. So we have to go back to our balance sheet and adjust delivery advance amount, historic cost by 40, which was sold. We have to adjust accumulated depreciation by 16, which was sold. And we have to add special line in our operating income and expenses section of profit and loss statement, which reads loss on disposal. Loss on disposal, 4,000. Then we have to accrue for depreciation on other assets. So the statement, the additional piece of information states that land would never be depreciated, equipment is to be depreciated on 20% straight line basis, and delivery events 40% on reducing balance. So let's deal somehow with land. The final amount of the net book value of land would be the same as the cost, £150,000. Property, plant, and equipment should be depreciated by 20% using straight line. So we have simply multiply the initial cost by 20%, and that amount would be the depreciation charge for the year, increasing accumulated depreciation. It will give us 72 plus 72 of depreciation to the accumulated depreciation column. And we have also to consider depreciation expense in profit and loss statement. At the same time, depreciation, property, plant, and equipment, 72,000. And reducing balance method for delivery events. We have to consider here the total amount of historical cost, which is 42, the total amount of accumulated depreciation, which is 28, and adjusted for 40% in addition. That gives us 7.2. Oh, I will show you the calculation. So here we have 46. Here we have 28, and that should be multiplied by 40%, which eventually gives us 7,200. 7,200 goes to accumulated depreciation of delivery events, increasing the total accumulated depreciation for the for that type of property. Не получается. Okay, so let's leave it like that. So the total amount of delivery events, the historical cost, would be 46. The total amount of depreciation here would be 35,200, and the net book value of delivery events would be 10,800. Property, plant, and equipment. Historical cost the same, 360. Accumulated depreciation 180,000, and net book value would be 180,000. And now we can calculate the total of non-current assets, as at the end of the year, considering all the adjustments, which is 340,800 pounds. Subtotal for non-current assets here. And we have to add depreciation expense for delivery events in our income statement. So that's all. The next step is to adjust for closing inventory. As you remember, opening inventory from trial balance, which is given, we have added to cost of sales calculation here. And now closing inventory, we have to add to current assets in statement of financial position. So I would add here line stock. And at the same time, closing stock should appear under cost of sales calculation in income statement, as I said before. So amount of closing stock should appear here in that box. But before, we have to calculate the cost of inventory, because we are told that inventory has its selling price 196 and goods are marked up by 40. That means that the cost of closing inventory was multiplied by 1.4, and 4 goes states here 40% markup, and the company received 196,000. So what is the cost? That simple equation tells us that the cost of closing inventory is 140,000 pounds. And exactly that amount should appear on the closing stock in statement of financial position and income statement. So here we will write down 140,000 and 140,000 here for the purposes of cost of sales calculation. The next point, and I believe here the 6th point, corporation tax for the year ended is estimated to be 19 and is to be paid on 1st October. And the trial balance, in the given trial balance, it is nothing said about corporation tax. So I believe that that amount totally should appear both in accruals and in tax expense in profit and loss statement. So this would be like the whole adjustment. So we have to add a new line in short-term liability, tax payable, 19,000, and we have to fill in line tax, which we have in income statement, with the same amount, 19,000. This is the simple, straightforward adjustment for corporation tax. And the next point, number 7, is very complicated. It's about suspense account, which we have to clean up. So let's create a new workings for the point number 7. I will copy the wording and move it down. It would be workings number 2. How to deal with that? In the trial balance, we can see the suspense account with the credit balance of 5,000. So if we draw a T count, suspense account, which should be cleaned up, so the final balance should be 0, we'll start with 5,000 here. Debit is on the left, credit is on the right. And the first point is about receivable here. The sum of 14 was received as direct payment bank account but it was unclear which customer had sent this money. So the company has debited 14 at the bank account, but hasn't credited the receivables account. That means that now the company have to make a correcting entry, making debit suspense account, credit accounts receivable, because the concrete customer has paid off his liability in amount of 14, because now we do know who it was or which company it was. So the first correction would be 14 on debit side of suspense account, because we need that suspense account for crediting accounts receivable. That's how suspense account works. And the second point is rather complicated. It's about corporation tax liability. Or I would better say not liability, but expense. The wording here implies that the company still needs to pay 9,000 more. That is why that 9,000 of additional tax expense should appear in profit and loss statement for the current year. So in order to post it, we have to use suspense account also. We have to debit our profit and loss account, I mean tax expense. So we have to increase tax expense in amount of 9,000. And for the purposes of posting that entry, we have to use suspense account in the same amount. And if we post 9,000 here on the credit side, we would have the same turnover on the debit side and on the credit side. That means the final balance of suspense account is 0. But we have to use that amounts, that line and that line, in order to adjust our financial statement. So we have to decrease accounts receivable in amount of 14, and we have to increase tax expense in amount of 9,000. It's not the adjusting entry, it's the correction entry. So accounts receivable should be decreased less 14,000, correcting entry, and tax expense should be increased by 9,000. And the total tax expense for the year would be 28,000. And I will move net income line a little bit down. So we have the final step left. It's about accounts receivable and provision on bad debts. So the first line here is that the customer owing 9,000 recently has recently been declared as bankrupt. So we have to deduct 9,000 out of accounts receivable, and then we have to adjust bad debt provision on 5%. So let's do some workings here. We have accounts receivable in trial balance in amount of here, the first line and the second line. 183 less 10,000. So 183, we have just deducted 14 correcting entry, and we have to deduct 9,000 more. So the total accounts receivable, which should appear in balance sheet, would be the final corrected amount, which should be used, by the way, for the purposes of provision on bad debt calculation. And the final amount would be, I've just lost the answer. The final answer would be, the final amount would be 160. Great, 160,000. And provision on bad debt or doubtful debt should be 5% out of that amount. That means we have to see 8,000 as a provision of bad debt in our final statement of financial position. But in trial balance, we had 10,000. So we have to decrease that provision, increasing our profit for the year. So in order to decrease provision on bad debt, I will repeat our calculations here. So we have to deduct 9 here. The final amount of accounts receivable would be 160. And here we have to have 8,000 So we have to decrease provision on bad debt, and that means we have to include that decrease provision on bad debt with the plus sign like income in profit and loss statement. So that would be the only operating income. The only operating income. Decrease in bad debt provision 2000 with a plus sign. And I believe we have ended up with all the adjustments, and now we can calculate the totals. So first of all, I want to calculate cost of sales. So we have to consider opening stock, purchases, and closing stock with a minus sign in order to calculate cost of sales. The cost of sales for that year would be 1,374,000 pounds, and that amount should be used for the purposes of gross profit calculation. So sales less returns in less cost of sales less returns in less cost of sales eventually gives us gross profit, which is 587,000. I have highlighted lines which should be used, and now I'll remove the highlights in order not to confuse you with the following calculations. So I will remove highlights here, here, and here. Gross profit. Gross profit should be used for the purposes of deduction of any other expenses. So I will put minus sign on the final amounts of expenses. This is the final expense on insurance. This is the final expense on distribution cost, advertising, electricity in amount of 18,000. Loss on disposal with a minus sign, depreciation, property, plant, equipment, and delivery events. And the only amount which should be added but not deducted is the decrease in bad debt provision. And the operating profit before interest and tax, is the gross profit less all their expenses plus any other income. And eventually this amount equals 119,300 pounds. Then we have to deduct 8,000 of expense and calculate profit before tax, which is 111,300. And then we have to deduct taxes in amount of 28 and receive the profit for the year, profit after tax or net income, the same in amount 83,300. So basically this is the final, the most important line, the most important amount which should be used in the next financial statement we are to compile to finish, statement of financial position. In statement of financial position, that amount goes to equity section, goes to retained profits, increasing the total retained profits of the company by that amount. And I would remind you that the only line we have skipped in trial balance is dividends, interim dividends paid. I've highlighted it with green. So we have to deduct that amount, 28, out of retained profit, because retained profit is the only reserve which is used for the purposes of dividend payment. So we have to deduct 28,000 as dividends paid in order to calculate the closing retained profit. The closing retained profit would be 100, I will change the column, 115,300. And this is this line should be summed up with share capital, and eventually the total of equity section is 415,300. And now we can move up, calculating the total current assets. We have calculated before the total non-current assets. Now we have to calculate total current assets, considering all the adjustments made. We have to take accounts receivable amount 160,000, deduct bad debt provision in amount of 8,000, and add prepaid insurance and closing stock. And the total non-current asset would be oh, and by the way, I do remember that we haven't recorded cash received for the sold van. It was my mistake. We have to state here cash received for the sold van, which was omitted from records. And when we have calculated profit or loss on disposal of fixed asset, we have forgot about inclusion that amount in the solution. So that 20,000 which was received should be added to the current assets, and we can assume it as a separate bank account with that amount received from the customer of old van. So the total current assets could be calculated as 314,500. The total long-term liability here has the same total, 80,000. And now we have to calculate the final subtotal, which is current liability. And current liability, we have to use interest and electricity accrued, 12, plus overdraft, 18, plus accounts payable and tax payable in amount of 19. So the total short-term liability is 160,000. And now the final step, we have to check our calculations. We have to check ourselves. So if we sum up non-current assets and current assets, we receive amount. I will use the basic counting equation: assets equals liabilities plus equity. The total assets would be 655,300. And if we sum up all the liabilities, here we would have a non-current liabilities plus current liabilities, which is 240, together with equity section, which is 415,300 pounds. We can see that our balance is in balance, and we can congratulate ourselves that we have solved the task successfully.